Hey traders, welcome to today's market update. US equity markets, starting with the S&P. See, we had a little bit of a tumble heading into the end of the week and last week. As to whether this is a meaningful top or not is yet to be decided, yet to be determined. Getting quite a bit of a bounce this morning in the S&P, which is kind of across the board. QQQ is up pre-market. So I suspect it's more of the same, just a buy the dip type strategy. When you look at this little trend line that's formed, you can see how this is an area of potential support. But as we've continued to reiterate throughout these market updates, we remain long the indices. Target level for the S&P is around about 4,700 from a structural point of view, but it still remains on very thin markets, very cautious markets. And because of that, we have to be really cautious with our longs and which stocks we are looking to be long. As you can see, the S&P is now sitting bouncing off the 0.786, which obviously makes it into a very big, strong danger zone that we do have lined up. So again, these markets are extremely overbought, but doesn't mean they can't go higher. So we have to be very very strategically positioned in our longs and make sure we are backing them with some meaningful shorts, which we do and have been doing over the past few months. Triple Q, pretty much the same thing. Still some upside potentially here. May see a short-term dip. Potential that we'll have to look at this little structure that formed back in July as a potential point of a running flat. So maybe we see a little bit more downside this week, down towards the 370 region on triple Q, and then a turn back to the upside, and all of that would be corrective. But when looking at the actual structure itself, it's very bullish. It's very kind of overcooked, and it's very lower time frame, which kind of takes away from its potential accuracy. But that being said, it does look like it is a potential that we see a little bit of a down week in triple Q, and then from there a little bit of a bounce moving forward. Dow Jones Industrial, kind of the same view, although we would have preferred much more upside from this little corrective pattern that formed. And you can see how this is kind of waned at that 35,500 level basically, and seen some pretty strong downside there. So we're just watching this to see what's going to develop moving forward. You may find that this develops into a little bit of a flat pattern rather than the smaller corrective structure that we had here, meaning all of that was actually going to be your A wave. Let me just clarify that. So all of this little section here is just a corrective structure further upside down the line. All of this is your A wave. Your chop up is a B wave with a wave failure at the end, and you see a C wave and dips the market down towards kind of 3,300 down the line, which is another possibility. So kind of looking at a little bit of a down week this week, and we'll have to just see what develops moving forward. Russell, interestingly enough, if we see a down week like that in the Dow Jones, the Russell is going to make new lows more than likely, which is very bearish in terms of the structure that we're seeing here, because given the structure looked complete to me, this move higher looked like a potential move that was going to continue. If we start to see a fade and a test of new lows, you may see that this is start more of a topping pattern than anything else. So again, the Russell remains, as we said, in very wary ground and only really a buy above these 2,400 levels, basically. Part of our structural longs or strategic longs is to remain long the FANGs. Facebook continues to do well. However, we are coming really in a region here where we could see a sell-off, potential sell-off down the line. So just have to be really cautious. And what I'm a little bit concerned about is if we look at this as a rising triangle or rising wedge, as known in classical charting terms, you can see how this rising wedge with MACD divergence could be a point of failure for Facebook. So you have to be really, really cautious here. And keep our stops nice and tight in case we do see a meaningful drop from there. Apple, quite a strong pullback, but in line with our lower time frame structures. We did say we were going to see, or we're looking to see a bit of a pullback, which is exactly what we've seen, following the highs at 156, and all of that is just part of this bigger corrective structure that's formed, more complex flat pattern. along these lines. So potentially a little bit more downside in Apple. And to me, if we see a turnaround from this region, from this 146.50 region, then we'll definitely want to start to look for longs and to get meaningfully long Apple, because it's those fangs that are going to perform well. And if this does turn around, we can see upside potential, even just on the lowest time frames, sitting around about this 175 level. And obviously that ties in quite well with the higher time frame structures as well. So we'll be watching for that and waiting for that bounce to get into Apple. Amazon, having closed this gap, I suspect we're just going to see some corrective price action in Amazon before we head higher. As we said, again, we were looking at a complex flat of a higher nature, higher time frame on Amazon. And as you can see, structurally speaking, we were looking for a move down to kind of 280. Maybe we still get that move down towards this 2800, 2900 region before we take off. We'll have to just wait and see what kind of corrective structure forms in here on the lower time frames, or if it's just going to be a meaningful impulse to the downside, making this a complete structure, and then we can start to look for longs there. So as you can see, it's quite a bit of a risk off type of week. We're just kind of really cautious about our longs across the board. These longs we've been carrying have always been cautious, but now it's a time for extra caution as the market looks weak. Microsoft touching on those minimum regions, a little bit of a pullback. Have to just wait and see what happens here. But again, we're sitting in the danger zone, and it's the same with Google, which is just kind of in a different atmosphere at the moment without any corrective structures since the 24th of September, just basically a straight line up without any meaningful corrections. So really, really cautious levels here. Netflix popped higher, coming out of a very, very complex structure. We weren't looking for that. We were looking for something else. But again, there's no real reason to be long Netflix at this level. If you're looking to get long something, I'd much prefer Apple, Amazon, maybe Facebook. The rest of it is just kind of really, really dangerous levels right now. AMD starting to make another move towards the downside. We did say we're looking for a corrective move in here, potentially just a small little zigzag with meaningful downside to come, especially if the rest of the market sell off. So we'll have to watch for that. Not the best in terms of a short entry possibility, but good indication of what we're seeing across the board in the rest of these markets outside of the FANGs. Bank of America starting to pull back from our corrective structure that we outlined, and potentially a really meaningful topping pattern that's forming here. We remain extremely bearish financials and looking to enter shorts there. Alibaba still kind of hovering around this 23 August lows. Lots of bearish news, but somehow Alibaba continues to maintain its structure. And this is one of the ones we're looking to get structurally long Alibaba to follow some of these FANGs higher that we're meaningfully behind. And Alibaba is one that we would like to get long coming out of this really, really big structure. So some potentially big moves coming out of Alibaba, contrary to the market. And this is why we like the long, we like the structural long, because if it does get some upside, Alibaba will definitely be an upside that has a lot of potential strength in terms of the upside targets. If we look at the upside targets themselves, and if we do see the structure play out from where it is, we can expect these markets, we can expect Alibaba to get up towards those highs at 300 again, 310. And obviously that depends if we have bottomed out or not. So we'll be watching for that as a potential long once we get confirmation of a turn to the upside. But so far so good. Momentum's really died to the downside despite all the negative news, and we might start to see a bounce here. Berkshire Hathaway, another one that's turned to the downside, coming out of a decently looking corrective structure. So something we really need to be cautious about again. Short entries below these lows, I think, are high probability trades in all the financial stocks. Citigroup as another one, entry below these lows, another one that is high probability in my view, coming out of a rising wedge, going into an expanding flat, and then starting to see some downside from there. CCJ bouncing strongly out of this $15 region. Did say if you are looking to get long, there is some potential in getting long. We were cautious, but if you did kind of roll the dice, we have had that little bounce. And again, we're coming into an area where on higher time frame and lower time frame structures, it's an area of danger. So good area to kind of trim your longs, I believe. at least take some profits off the table. Chipotle, kind of just chopping sideways, but again, in a region that's kind of dangerous for Chipotle. So if you are long and you have gotten this bounce from this 1,300 region, you've got some really good profits there. So be really cautious holding on to those meaningfully moving forward. You might find that this develops into a decent corrective structure, in which case you can look to get into some longs again. But right now, I'll be kind of more cautious in taking profits. DraftKings bouncing a little bit higher than I suspected, but still in the region where I believe we're going to see some downside moving forward. A little bit of an ABC corrective structure. I don't love the corrective structure, but we got up to the 1.414 level, and now we just need to look for an area where we can get into that short. I still believe this is a topping structure that is going to see some downside. As you can see, it's got that kind of head and shoulders neckline structure to it. And I don't see how DraftKings will break meaningfully higher from here. If this whole structure makes a move higher and breaks these highs, obviously we'd have to consider ourselves wrong. But again, it doesn't mean I want to be long. There's nothing that really says to me I want to be meaningfully long in any of these stocks. Penn pulling back pretty strongly from our ABC corrective region that we spoke about, starting to see some downside. Just need to see if we're going to get some follow through out of that. Disney ending the week in the red, still chopping sideways in here. Very, very messy pattern. I still think downside is on the cards. You might find that this region, as you can see, lots of resistance at this 185 level. You might start to see some downside, still some big gaps open there. So again, I don't want to be long. I'm more interested in trying to find a short entry. Expedia, kind of spent the week chopping sideways, the last 2 weeks chopping sideways, but I still believe this gap here is one that needs to be filled, and we could break lower from here. Still potential that this is just a zigzag, meaning on the lower time frames, you'll see a little bit of a push higher. As you can see, there's still a little bit of a gap at this 152 region. So you might see a pop higher, and that could get a good place to start looking for an entry order below this kind of distribution point, or point where you've seen all of these sideways bars. Volume-wise, hasn't been much. As you can see, just kind of flat volume. So waiting for potentially a pop higher, but I think entry order below these lows as well. Ford continues to move lower. Spent the week moving sideways, basically. We still are cautious of a potential bounce up here for this corrective strategy or this corrective pattern, but it all depends about what's happened in here on the slowest time frames. But regardless of what we're seeing here, we may have seen the corrective structure already, which would be that one. It's very low a time frame though. I'm getting some meaningful downside there. And if that is the case, we should start to see a bigger corrective structure forming in this region. Or what we're seeing here is part of a corrective structure that is still busy forming, which means you'll get this one up, get this down. We're in the choppy B wave section, and get another leg down, and then a pop higher, and then all of that will be a nice corrective structure. But again, it's too early to tell. But either way, we remain bearish forward. GDX, our gold miners, still looking bearish. Really strong follow through to the downside over the end of last week. And we still believe this is going meaningfully lower moving forward. Gold is kind of performing exactly as we thought in our FX update. And we started to see some downside there. Downside targets here are 16 and below, potentially even lower than that. Potentially as low as 12, where we'll start to look for maybe a little bit of a turning point, but we remain bearish gold. Goldman Sachs, another one. We're just waiting for that turn, waiting patiently, following the rest of the financials. Goldman Sachs and Morgan Stanley both holding up at these levels, but again, doesn't mean we want to be long. It just means we are waiting patiently for those short entries. Structurally speaking, I still believe a big move to the downside is on its way for financials, especially Goldman Sachs, and more so for Morgan Stanley, which is, as we see, right in that sell zone. Now we're just waiting for the momentum to drop. We're waiting for a break of these trend lines to the downside, and we'll look for that short entry in financials. IBB still holding up, the biotech ETF. We still think it's a good short here. You can see there's a little bit of a double top that's formed here, 175.60. But even on the smaller time frames and the higher time frames, And now even the smallest time frame being the hourly chart, you can see how a short from this 176 region may just get down to kind of 164, 162, but it's also part of a higher time frame structure, which could get down to 145, which is part of another higher time frame structure, which could get down to 109. So all of these structures pointing towards downside. It's just a matter of how low are we going to go from these levels. So really, really nice setup, given that the probabilities of a move to the downside are very high. It's just a matter of how low are they going to go. IBM, a little wedge. Again, we said we were looking for a move up to 162 for the ideal sell, but we had to be really cautious that we haven't seen a wave failure and starting to see downside here. We continue to see these little wedges breaking to the downside. We're seeing another little wedge breaking, and we believe entry order below the lows is a high probability sell, but we have to be really cautious that this isn't just corrective for that final pop higher. So just watching that. But if we do pop from here, or we do move lower from here, it will be meaningful, because it just means we've seen a wave failure, not getting as high as we wanted to, which means we'll see some very, very strong moves to the downside in IBM. Initial move to the downside to break 90 with a full target sitting around about the 60 to 65. So big moves to come to the downside there. Intel, we were looking for just a little bit of a pop up towards this 58 region, which we did get to an extent. We never got all the way up there, but it has done enough on lowest time frame structure to be in an area where we could sell. This is what's going to be called a contracting flat, which again, just a very bearish pattern. And we could see downside there. So entry order below these lows, definitely valid. You could even sneak that up towards this 52 region, although I'm a little bit cautious of that. Always when you get a contracting flat, it's always a wonder whether you're just going to see a move down and then finally you get a pop higher to complete your flat pattern, your corrective pattern, and then you get a move lower. So you have to be really cautious about where you put your stop loss and what you do in this region. So I'm more inclined to be patient, put entry order below those lows, because if it is a contracting flat, the momentum to the downside will really be made up, or this little caution will be made up by the momentum to the downside. So we'll be watching that this week too. Johnson & Johnson continues to pull back strongly from our sell zone, doing really well. It's one that could become a buy at this 155 region, but also caution that it also doesn't become a expanding flat, which means we could see much bigger downside down towards 142. But at the moment, it remains a pattern where we want to become buyers at around about this 150 to 158 region, as long as we remain patient and wait for the turn. JP Morgan Chase, as you can see, head and shoulders structure still really clean and clear. A, B, C, D, E corrective structure still playing out well, still seeing downside. End of the week, really bearish, big engulfing candle. And now we expect that this is going to continue to the downside moving forward. So again, financials looking really weak. Live Nation, still kind of chopping around. We've been in this region since August, but we still have a bearish outlook. Still think we're going to move lower from here. And we're just waiting for that break lower. Structurally speaking, still looks good. And we still like what we're seeing here. So just waiting with bated breath for this kind of structure to play out in a bearish manner. But again, no reason to be long whatsoever. If there was reason to be long, I would be touting it to be long. If it continues higher from here and I am wrong, it doesn't mean it was a reason to be wrong, because structurally speaking, more than likely that results in a break of the highs and then another pullback and then a structure that starts to make a little bit more sense. But right now, I remain bearish. I remain part of the structure that says we are heading lower from here, and it's more part of a ABCE triangle more than anything else right now. So waiting to see what develops. MicroStrategy, as we said, we're bearish and had quite a bearish week last week. Still some open gaps here, and we still continue to look for a move to the downside. This should move meaningfully down this week following a large corrective structure, if that is the case. Otherwise, we'll have to have another look at it. NVIDIA, now at full target, very dangerous zone, very dangerous levels for potential pullback. Doesn't mean we don't get up to kind of 263, 284, but still at dangerous levels, especially with major tech potentially seeing a little bit of a pullback here. So I'd like to see this develop into a corrective structure where we can maybe look for a sneaky long, but it hasn't done enough for me yet. I'm on the sidelines for now. Pfizer, another one we're extremely bearish, and strong pullback from our highs at 52, continues to look bearish, and we continue to have a downside target of, so it's all the way back in the monthlies. This is a bit part of a big turn, a long turn in the downside, and a move from 45 down towards kind of 1650 would be our full target there. So remain extremely bearish and still looking for that short entry from this level. There was a little bit of a strategy we used that would have allowed for an entry at this level. I never took it, but still waiting to see what develops there. But either way, I'm remaining consistently bearish Pfizer from these levels. Riot is another one that's pulled back strongly last week. Going into an area of interest, we put this target here or this block here to say if we get down to these levels and you want to be bullish, you can put an entry order above these highs, because if it does, it gives a potential structure for a move higher from these levels. But no reason to be long in this level, and I'm more inclined to be short following the structure. I still believe we're going to see further downside in the crypto space and Riot and MicroStrategy moving forward. Ross Stores continues to break lower. We're still looking for one last move higher given the structure that we're seeing. Maybe just a temporary pop. We might start to look at this as a little bit of a expanding triangle for continuation to the downside, or something a little bit more complex, but again, still a setup that looks for a move to the downside down the line. So a short bounce up will have me interested in getting into a short trade there. Spirit Airlines, we wanted to pop up towards this 26 region to add to our short position. Never quite got there, got up to 25 with a big bearish candle from there, bearish engulfing, excuse me. So potentially we're going to see this head lower from here. Not the ideal setup, but the short strategy that we played out right at the top here at this 33 level is still playing out really well, and should continue to play out down the line. Starbucks, sitting on the sidelines waiting for this corrective move to come. So far, it looks like a bit of an A wave. Now we'd like to see a bit of a chop down towards these lows at 112 before another pop higher. That'll give us a nice corrective structure that we'd like to get short. That's sitting on the sidelines. I'm not short just yet. Same with Seagate. A little bit further along than Starbucks. As you can see, we had the A wave. Now we've got this choppy B wave down to the lows. Then another pop higher, and that's confirmation of our downside and our short entry. AT&T closed the week pretty strongly. I think downside continues to at least break these lows at 26, but more than likely to get down towards 22. So I still like that as a short trade. And that's something we've been short since this kind of 32 region, following a really clean corrective structure that we had and a really, really big candle that confirmed that downside. Visa, we still expect further downside down towards this 200 level where we become buyers. That's moving pretty strongly, moving nicely with our pairs trade that we had with a MasterCard short, which a MasterCard short, having broken this, has moved down really nicely as well. We like to buy both at this region before further upside as a potential. It looks like it wants to head higher, but we need to get down to this 320 region first. XOM, ExxonMobil. Still looks good, excuse my dogs, still looks good for further downside, and we like to get meaningfully long ExxonMobil and oil stocks generally in this 44 region, 40 to 44 once we bottomed out. But we've liked our short breakout of this rising, which has performed well for us, and we'd like to flip that around at this $40 region. Same with CVX. As you can see, nice topping pattern, nice structure. Moved well initially out of the corrective structure, had a little bit of a bounce from there, but I don't think that's